It would be great to have someone who could do our work for us, right? Someone to prevent us from making mistakes. Someone to assist with our routine professionally and allow us to devote our time to communicating with our closest people. If only we could get results without wasting our time for nothing. Unfortunately, it's impossible in real life. But wait, Light Forex Social Trading. Spend your time doing what really matters to you.
Hi guys, good morning, 20th of August 2019, 8 AM CET, 7 AM London if you wish. Piotr here, meaning this is a pre-London open live market coverage only here on Light Forex Global YouTube channel. Let's start with risk warning, guys. Please bear in mind, trading effects on margin carries a high level of risk, may not be suitable for all investors. You can sustain a loss of some or all initial investments, so please do not invest the money that you cannot afford to lose. Seek education, gain experience before risking real money. However, past performance doesn't guarantee future results. Alright. So looks like Jacksons Hole is gonna be the key driver this week. Hopefully we are going to discuss this with our macro guy, Michał. We are going to connect with him within the next 8 minutes. We will check what he has for us. Very slow start when we are talking about the FX, a little bit more fireworks when we're talking about the indices, when we're talking about the oil and gold, especially with gold below 1500 right now. So there is of course huge pressure from the President Trump towards Powell ahead of the Jacksons Hole. Some of you probably remember one of the Jacksons Hole symposium when Bernanke announced QE2, sorry. I'm sorry, QE2. Yeah, I'm trying to use my mother language. Anyway, euro under pressure. We've moved back below 111. Pound overall, not only with dollar but overall, last week we've seen shorts profit taking, so pound jumped a little bit higher. Also dollar yen recovered above 106, holding 105, 105.50. That's what we are going to discuss when we are going to switch to the charts. From the calendar perspective, Jacksons Hole Symposium is a one thing, but let's check what we have, what else we have in the calendar. We do have today CBI industrial order expectations from UK at right at 11 AM London, 12 PM CET. Nothing extraordinary during the New York session, and we are going to cover this session live today. So you are more than welcome to join me. 3 p.m. CET, 2 p.m. London, half an hour ahead of New York cash market open. Then Wednesday, it's without the fireworks during the European session. With the German 30-year bond auction in the background, but then New York session tomorrow will kick off with Canadian CPI, and that's gonna be the driver for the Canadian dollar. So we are going to discuss Canadian dollar tomorrow for sure. Then after the US cash open, existing home sales from US and crude oil inventories tomorrow 4:30 p.m. CET, 3:30 London. So don't forget, we do have private API data later today after US cash close. Thursday, it's of course all about the Jacksons Holes, but we shouldn't forget that it's also the PMI day all around the world. We are going to get the Australian one, we are going to get the European one, with the focus on the, especially on the German one, right? Here is where the real damage might be done for euro bulls. And Friday is a New Zealand retail sales, is a Canadian retail sales, and Jacksons Hole Powell speaks at 4 p.m. That's gonna be important. That's gonna be important. All right. So let's try to connect with Michał. Let's try to discuss some macro things, and let's try to check the charts as well. Stay with us. We will be back together within the next few seconds. Good morning, Mr. Michał. How are you doing after a long weekend?
Good morning, good morning. Okay, I can say sorry for the light, but it's pretty gloomy outside, so I need to turn on some like additional lighting on my desk.
Okay.
We
can forgive you, no worries.
Yes, can you repeat? I didn't understand.
We can forgive you, no worries. This additional light.
Yeah. It was long, so slowly we are getting on the right wheel, on the right direction. Maybe we'll start from Japan, JPY, because we see that the market is still focused on poor trade data, and we see a little bit a slight loosening in a trade war between South Korea and Japan. There was information that some ships were sent for the export with the high-tech materials to the South Korea, especially it's a big breath for the Samsung Electronics, which is the biggest receiver of this crucial materials for them to produce. And this whole conflict is of course based on the old scars after the wartime, about the occupancy of the South Korea by the Japanese, and forcing the labor force to work for them. So we see like still they feel the pain about those latest about those far away damage. I don't know, sometimes I don't understand. Maybe there is some deeper meaning in this, because for me it's like a little bit hard to understand. And
I think it's also the thing what is going on with the trade tension between US and China. So overall, as we discussed some time ago, at some point in the near future, I would say the whole Asian region might be totally under pressure. And as we discussed,
recession.
Yes, and as we discussed previously. The Japanese yen gained the strength lately as a safe haven currency, but
right.
once the some kind of the crisis or a little bit of the recession will switch towards the Asia, then if we are going to have some kind of the Asian crisis, we cannot rule it out. This stuff. So then I think the yen also is going to lose the ground in relation to the dollar, especially if we are not going to get what some are still expecting, some kind of the bold cut from the FOMC. But let's check what we have on the dollar yen chart right now. Here is a daily chart. There was a strong recovery last week, so market got back above 106 and was trying to hold this 106 over the course of the week, closing the week on the strong note, close to 106.65. In that case, I think that it's worth, ahead of the Jacksons Hole, it's worth to mention that that was the previous trading range. Not taking into the consideration the upper shadows, just trying to take the bodies. When we broke down through, we made the same in size move. So I think for quite some time there is a probability we are going to stay in that range for quite some time. Here the trading range we've seen 13th of August. That's gonna dictate what is going to happen most probably on the market. So in that case, using the high and the low from that particular day, we might treat it as a top and the bottom of the range. And currently we are trying to trade the top of that range. The dollar yen gaining the strength mostly because of the positive sentiment we've seen yesterday. So we were trying to push higher, but still below the top. So the high from this 13th of August as well as high from 6th of August, providing some supply here. And to the downside, of course, the tweezer bottom here created on the 12th and 13th. So that's how I see the things on the dollar yen. We are still got the chance to try to hunt some more stops to the upside. We are above the weekly open, so I'm not gonna be surprised to see some kind of the attempt to gain towards 107, 107.30. And in case of the rejection of that zone, I'm going to try to take the advantage of the shorts. On the other hand, move down towards 105. That's where you want to see some bullish activity and trying to trade this type of the range. There is a possibility we are going to see the break down or break up, breakout closer to Friday Powell speech. Switching to the lower time frame on dollar yen. Switching to the lower time frame on dollar yen. As you can see, there are plenty of shadows from the intraday perspective, meaning that around 107, 107.30 there is bearish activity going on. So yeah, looking for stop count. Again, upper shadow and trying to join the party to the downside. Back to you, Michał.
According to Ian, just one thing about this safe haven status. I think it will just maybe we will see some slightly change of the direction when US when Powell about the maybe when the trade conflict with China will escalate more and more, and maybe when the when Fed will listen to Mr. Trump, right, and I don't know, do something like this 1% rate cut. But for now, we see this despite this, the trade balance.
Michał, do you believe in 1% rate cut?
No, of course not. But I'm just hypothetically saying, right?
Okay, so
Yeah, because it's still we see that it's 8 consecutive months when the trade balance is falling, and we see the very weak data and in the Japan economy, but still, yeah, safe haven status is pretty actual at the moment. Okay, maybe we'll go further for the UK because
okay.
yeah, no problem. Or you want to add something to the
No.
yeah?
That's
Oh,
yeah.
it's
We
good.
went through the dollar yen chart, so we are fine there.
Yeah, okay. So yeah, about that, about the pound, we see that everybody is, of course, focused on Brexit. Yeah, the operation Yellowhammer leaked into the press, and yeah, that it is about. It is about the very pessimistic, the worst case scenario for the Brexit. It is said in this. The information is about that the UK economy will face a shortage of oil, of food, of medicine for at least 3 months, and yeah, after that, of course, the Minister Michael Gove, which is responsible for preparing the Great Britain for this No Deal Brexit, said that it's worst case scenario. They don't they don't think that might happen this hard. Yeah, and yeah, the markets are no need to worry, right? Everything's fine. It's just a hypothetical prognosis about what might happen, right? And yeah, and after that we see that Boris Johnson is counter-attacking, we can say, for the EU, and trying to force a new deal, a new prospect for the deal with the EU, and he's meeting with the EU representatives from Germany and France in the next week. So we see like the counter attack he wants to clearly show that the latest actions was like for securing that everybody do that about the Northern Ireland border, and in case that we will have a no deal Brexit. And right now I think he just sent the task to everybody what they should do, and right now he can focus on this I think for him a less possible scenario that to get a deal with the EU, right?
And
Because we see clearly everybody is talking about a no deal Brexit, but I just want to finish that I think at least for now, for the short time, market bought that news, or at least it's some kind of a correction of the latest moves, right?
I think
Maybe
that
from the
the
technical
Boris Johnson action is in a very good when we are talking about the time, is a very good time. The timing is I would say perfectly fine. It's similar situation to what we discussed some time ago. Why President Trump pushed the China, because China was weakening already, and the same situation is here. I would say from the economical perspective here, especially the weak German data, when we do have these internal problems inside the EU, so trying to push for for the New Deal, it's a very good moment, and if there are not gonna be better time to try to win something, Overall, I think that the chances of this no deal Brexit are still quite high, but I think that there are going to be the pressure inside the EU from few members to try to anyway make it in order fashion. So I think we might see one more attempt to push lower on the pound. and then we might see some kind of the bigger profit taking, or even changing the direction. So in that case, as we spoke about the Japan second ago, so here I do have pound yen as the first chart, and from the higher time frame perspective, this is the weekly pound yen chart, and as we are see here right now, we are at the verge of the big breakdown. So in case of the move below 120, right, that's the psychological level, and we see that here last time 122.50, then the levels close to 120. In case of the break and close, for example, on a weekly chart below 120, that might spur the bigger move to the downside, and in that case it could be either the size of this latest move. So in that case, in case of the move below 120, that could produce the fall. I know that today it might sound like almost mission impossible, but then we might see even move towards 90, right? I do remember some time ago when we were still around 105, it was a few years back, when we were around 105 on dollar yen, and there was some expectations that in case of the break of psychologically 100, we might see wall of supply below stops and stuff like this, so we might go towards 90. No one was really saying that yeah, it's going to happen, and it happened. So similar situation here on the pound. So in case of the break and close below 120, that might be very ugly from the pound bulls perspective. On the other hand, we might see, as I mentioned, the last attempt to break lower, so some panic selling, I would call it, with the rejection and lower shadow. That would be pound positive. But let's have a look what we have from the shorter time frame. Let's switch to daily and let's have a look what might be tradable this week. Similar to what we've seen on the dollar yen, move back towards the latest supply. So in that case, we are talking about the levels between 130 and 129.50. So Friday, yesterday, we were testing the bottom 129.50. Possible supply zone, no huge rejection as of now, so that's quite interesting, because if we are testing supply level, we should see some kind of the rejection. But as of now, there is just from the intraday perspective consolidation right under the supply. So it might be some kind of the preparation to break. To try to break higher from here. And you know, if your imagination is good, you can try to look at this 1 hour chart, and you can try to imagine yourself that it might be some kind of something similar to inverted head and shoulders. If that would be the case, then we might see rally even towards 131, 90, 132.10, and I'm not gonna be surprised if we are going to see such a scenario to be traded out over the course of next 48 hours, for example. If the expectations towards some kind of the positive comments from the Jacksons Hole symposium and more pound profit taking from the short side, that really might be the case here on the pound yen. On the other hand, cable, so pound versus dollar, from the daily chart perspective, we were trying last week to close. Actually, we closed above the opening range from the 9th of August, right? And in that case, we are talking about 21.34. We saw yesterday, so we closed the week above that range. So if I'm not mistaken, that might be if I'm not mistaken, that might be tradable. And from that perspective, you might want to see the break higher towards 22.50, 22.80. That would help with the scenario in pound yen. So what we've seen yesterday, it was the retest of this upper shadow from Wednesday, Tuesday and Monday of the previous week. We saw the positive action towards yesterday close. It might be retest. So what I'm gonna to look for today from that pound perspective, I'm going to look for the 50% of that range again created on the 9th of August. In that case, we are talking about the stop count below yesterday low, and we are talking about the levels just below 120.21. And in case of the positive price action from the smaller time frame there, that might be the case for the continuation to the upside. On the other hand, sellers are happy with the yesterday move back inside that range. So today Tokyo was attempt to go higher, rejected. So in case of the London Open, what I would like to see, the stop count towards the Tokyo high, rejection around the weekly open. In that case, we are talking about closer to 21.50, and that would be the setup from the short side. So both bulls and bears have a case here, watching carefully either levels close to 21.50 to reject the rally, or levels just below 121 eventually to try to the long side on the cable. Back to you, Michał.
Okay, maybe we will go for the US dollar right now. So we can, we can stay at the cable chart, or maybe you will choose something else. Okay, but yeah, we saw some stock market collapse after the bonds when the two-year yield on bonds exceeded the yield on 10-year bonds, and after that, yeah, we saw almost all the important people in the US hasten to reassure the markets that nothing really is happening here. It doesn't mean that it's not any of the bearish signal. That doesn't mean that we will see very shortly the imminent recession, right? The Bullard from the St. Louis Federal representative, and even the Donald Trump itself, right, said that he didn't see any of the recession in the U.S. economy. And also we have the information.
Just disturbing you for a second. And here it's what I cannot get from the Mr. President Trump perspective. On one hand, he cannot see any signs of the recession. On the other hand, he's forcing Powell to cut the rate. What the heck is going on? Anyway, there was also the comment from the former Fed chair, Yellen, and she said that she doesn't expect a recession as well. She cannot see a recession on the horizon. Looks like it might be some kind of they are, how to say properly in English, they're trying to by pushing or pressing into the market the expectations is not going to happen, trying to to fulfill their expectations by the wars. We will see how it's going to end up. Anyway, the yields are also the market, the bond market wants Powell to make that cut, but again, I don't know if it's going to happen. Before we will get back to you briefly here on euro dollar, because we are going to have this week FOMC meeting minutes late on Wednesday, and there are a few things we have to take into the consideration. One thing, you are talking about what is going on in US, but when we are talking about the euro dollar, it's also worth to mention about the expectation towards the ECB and Germany. So
in
there
September.
was an article from the Financial Times about the possible package from the ECB as soon as the next ECB meeting, and that package might be much bigger than what market was expecting at the very beginning. That pushed euro dollar much lower. Then there also because of the really finally the German the most important people in Germany also recognize that, come on, of course it's better later than never, that there is something wrong with their economy, that they may ease the rules of the budget and try to help the economy to recover. But you know, ECB is printing money without the stop for quite some time, and it didn't help. So I don't know if Germany alone can do something in that case. So because of all of this, euro is testing, and because of the spread on between the 10 years German 10 years yield and the US euro dollar is falling back below 111. But I think this lower swing low here might hold towards the Jacksons Hole, with the hope that Powell will do something. In case of the no signs of the big cut, we might finally see the break through 110 on euro dollar, and then eventually that might open the way towards 108. But as of now, today, tomorrow, I think we might see the test of this low, but this low will hold. So overall, next 48 hours, I do expect some kind of the range to hold in between 1050 and 1250 to the upside. Back to you.
Yeah, I think about I will go back for this recessions worries from the market. Yeah, we see that despite the trade war, they're doing what they want, what they need to do to not showing. We will have the best sailing time in the year. Yeah. We are getting towards the Christmas, so all the data will be good about the sales, will be strong and stuff like that, and we will see. We see also another additional information from the U.S. right, that they are thinking to extend the a temporary permission for the cooperation for the U.S. companies with the Huawei, right, and also that might be the drive for the US dollar. So I think the market saw the yields and I think they overrated this whole situation. I think it's another kind of manipulation to pump and pump or something like that.
Especially if you are looking at the US indices, right? Here is the sign of the recession, right? Nasdaq is testing 7,800, so it's testing around the most recent high. So there is no sign of the recession. They simply, as you mentioned, that's a huge manipulation is going on. Market still wants to have access to the cheap money, and that's it's all about. The name of the game here.
Yeah, and I think it will. Yeah, at least. To the beginning of the 2020, we will not see any sign of the bigger recession. They have the strong domestic demand, I think that this whole trade war with the China, we thought, okay, I can agree that the farmers from the U.S. were touched by this whole situation. Slightly sad, and many of them will go bankrupt. But we also saw that they are looking for another opportunity to make a deal with the Great Britain. Of course, there are stuff like this. Like the cases like with the border with the Northern Ireland, which is the reason that they are holding back this quick deal that they said with the UK. But I think overall it didn't harm them as much as maybe China would like to would like to see. So I think at the moment I don't have nothing to add. Maybe you will go for another. You will go further with the chart or.
Yeah, sure. Michał, thank you very much for your inputs. It was a pleasure to have you here. Are you going to join us later today?
I think yes, but I will not promise. I will stay in touch with you in the next few hours.
So have a great London session and see you around. Goodbye.
Same to you. Same to everyone else. Bye bye. Take care.
Okay, so going back to the charts, Nasdaq is testing possible supply, but because of what we discussed previous week, I think we might see this attempt to make this one-to-one. So in that case, a little bit higher levels towards the last demand seen ahead of the break, ahead of this Niagara Falls. So we are talking in that case about the levels close to 7,850, and I'm going to watch from intraday perspective. Maybe there are gonna be few points to the downside to be made, but overall from medium-term perspective, I would look back. I would wait and see if we can retest 7,850. And to be honest with you, from the Jacksons Hole perspective, it's very possible. So the market expectations might try to push market higher. So Tuesday, Wednesday, tomorrow, right? Then the huge disappointment in sell-off again. So what might happen in that case with gold? Gold is back below 1500, and as of now, after the test of the top of the range. On Friday, we saw sell-off toward the end of the week. We saw the continuation yesterday, and we probably are going to test the bottom of the range. So probably if we can have another range ahead of the Jacksons Hole here on gold, that's the most probable scenario, right? In case of the breakdown through the latest low, right, we've seen here, I'm talking about the 1485, 1480, we might see the market doubling the range to the downside. In that case, finally, we might see retest of 1450 on gold. So guys, that's it from me this morning. I wish you a great London session. Don't chase the market, don't be trapped. Don't forget to join me later today. We are going to cover New York Cash Open live. We start at 3 p.m. CET, 2 p.m. London. So again, you are more than welcome to join me for the afternoon session. Thank you very much and see you around. Goodbye.
It would be great to have someone who could do our work for us, right? Someone to prevent us from making mistakes. Someone to assist with our routine professionally and allow us to devote our time to communicating with our closest people. If only we could get results without wasting our time for nothing. Unfortunately, it's impossible in real life. But wait, Light Forex Social Trading. Spend your time doing what really matters to you.